Ladies and gentlemen of the crypto space, we're live on a Friday, July 22nd at 11:36 a.m. Rationale for bear market portfolio additions. Loaded statement in some regards. The point, or at least a great way to start, is what was going on at the end of 2019, Q4 2019. Everyone was sleeping. There was nothing in the market. It was boring. It was dead. Not that it's entirely applicable to current market conditions in any regard, but why, and we're not there yet, I don't think, comparing current market conditions to late 2019 with regard to macroeconomic conditions. But for instance, it was boring. There was a lull. Everyone was depressed. There was no opportunity. Everything was depreciating. There was an excess of the markets. Liquidity evaporated. There was nothing at the end of 2019. Everyone thought it was gone and forgotten. I didn't. And that's why I do these streams even during these bearish market conditions. And this is not a return to bullishness. These conditions we're seeing with appreciation, significant appreciation, 100, 200% in a lot of assets. It's not a return to bullish market conditions. There's no inflow of liquidity. There's no inflow of capital. There's no inflow of participations, growth in user base and addresses. You could look at on-chain metrics all you want. They don't compare to good parts of 2021 and 2020. So this is, in regards, the lull, the boring, it rips and then it just does nothing. It goes nowhere because there's no excitement and clearly there's no exuberance. So what is the rationale for purchases? The rationale for purchases, somewhat in these current market conditions, and especially if things happen to get worse from a macro standpoint, is that of late 2019. Bottom line is, in my opinion, I want to own things for when turns happen. I want to buy at a discount. I want to buy assets that are mispriced. Now, we have a tremendous amount of opportunity compared to 2019, guys. I feel genuine empathy for persons that don't see these assets for what they are. As compared to 2019, there was nothing. There was nothing in 2019 with regard to enterprise. No one saw it. No one saw what was to emerge with regard to infrastructure. There's 56 EVM chains. Holy crap! An explosion of platforms and protocols and all of this, what all of these protocols do there was none of it in 2019. These protocols create communities, which attract people, which retain participation, which retain capital. By definition, that's a market, that's a merging market. Capital is trapped because capital is dollars. The success of an emerging market is its capacity to trap dollars. Why? Because there's incentive. There's reasons to participate. Maybe it's just games. Maybe it's capital flow and the potential for capitalization and gains. There's plenty of reasons, and clearly we're in the early stages of an explosion of reasons that will come in the future with products and services. I don't buy the argument for a second you could build all these things in centralized implementations. There's something profound about putting them into a state where something cannot be changed, and that obviously entails the entire discussion of critical mass decentralization. It's always a meaningful thing to consider. But of the 56 chains, I expect at least one of them to reach critical mass decentralization globally such that it becomes a utility for the planet for censorship resistant publication. And this type of publication, you're dealing with financial products and services. It's a layer above the regulating authorities of a particular nation. A critical mass, decentralized, EVM compatible network at a global scale It's not applicable to any nation. It's above the nations. That's crazy compared to 2019. So the rationale for buying in these markets compared to 2019, there's so much rationale. And I even saw rationale in 2019. Albeit a bit more speculative, actually, probably a lot more speculative, but there is so much of a status quo, of a history. I mean, it's only 2 years of history, but to me, one, that's the only history we got to go on, and two, it's profound. What has been created is crazy from a functional standpoint. The characteristics and attributes of enterprise are present. They're here. There's P and E's. There's P and DD per week. P/DD/W. I posted that on Twitter a couple of days ago. Price per dollar dividend per week. Not these quarterly dividends from corporations that have tremendous capex and human resource capex, and this is software, and this is why I've been going on a little bit of rants with regard to the excess expenditures in corporations. They're not efficient. People need to be removed from the equation. The problem with human resources is the human. So that gets into a whole nother discussion about if there's less people in the middle layer positions, less management, and it's automated, less menial labor. That gets into societal issues with regard to education, motivation, and incentives. That's something separate and apart. But if you could remove a human from a role, it's going to be a more efficient process. And that's how you move society into a better level of operation. Automate everything you can with deterministic operators. And these contracts are deterministic. They do what they do, no matter what, under all conditions, 24 hours a day, no ifs, ands, or buts. And to me, that is tremendous from a societal standpoint, because they will behave as they're expected to behave. And that's literally what everyone does with regard to human being employees. And how do they do that? With incentives. You incentivize an employee to do their expected role by paying them a salary. That's an incentive system. Benefits are just incentives. It's all incentives. Everything is about incentives. Human beings operate on incentives. Buildings are built. Skyscrapers are built because of incentives. We have been experimenting in the DeFi space because of incentives. Why? Because this is the way financial systems operate. It's all about incentives. What do you think MMT and the drops are, and yeah, the stimmy drops, and what do you think China's playing around with? Financials are all about incentivizing and organizing human behavior. It's a very philosophical discussion. It's not economic. It's not about labor. It's not about hard work, the organization of a population. It's all about controlling a population and getting them to be productive. And then you're able to measure how well a society is doing, how productive it is. For a society to be productive, there needs to be meaningful incentives to be productive. I'm not going to work if the paycheck stops. I'm going to go somewhere else and have them incentivize me for my labor. So compared to 2019, I see more reasons than ever to add to the portfolio. Not that I'm overwhelmingly adding. Every rule that I've been talking about is still overwhelmingly applicable. Nothing has changed at all in that regard. Got to have the cash. Need cash. Got to pay your bills. Everything. I'm not going to reiterate all my narratives, but I have a large cash position. I think I'm sitting on portfolios appreciated significantly over the last 2 weeks. I don't know, 50, 60% of the entire portfolio. Wild. But it's got to be a 20% cash position. So guiding principles in a bear market, prosperity is a period for saving, for periods of expenditure during austerity. Like what everyone saw that BlackRock's doing. They got $50 billion. If the housing market crashed, they're going to come in and mop it up. You're going to buy it all. Assets are what you want to own, especially productive assets that people pay. You want to be on the right side of rent. And they understand this, and the majority don't. So unfortunately, it's you know that's the pinnacle of modern capitalism, is literally just to be on the right side of rent. So you either are or you aren't. So it's a choice. You don't have to be. You could rent. You could be on the wrong side of rent, but why do that? Why choose to do that when there's only that's the only choice we have. Either you participate in this game and you play the game and you do it well, or you don't. And you can do other things. You could literally just grab a simple job and just play video games and smoke pot all day. Believe me, digression. When I was in college, there was two paths that I was very thoughtful of, of where to head in my life, because I was quite the avid relaxer and enjoyer in college, and very much enjoyed just playing video games. And I was a different person. I was young, and then I figured out what this whole shit show is, that this game they're trying to make us play. And you choose, pick one. There's nothing wrong with that lifestyle. There's nothing that says you need to make money and be able to buy things, and you, there's nothing wrong with that lifestyle. As long as it's sustainable, as long as you're not hurting anyone, as long as you're not destroying yourself physically, and there's nothing wrong with that lifestyle. But as long as we're going to play this game of capitalism, might as well play it right. Might as well define these rules and have these conversations and have these narratives that we've talked about on the stream to play it right. Last couple of thoughts have been all over the map. But this is like a 2019 period. I mean, we're on the threshold of absolute humanitarian crisis in Europe, absolute catastrophic financial conditions. I mean, literally, the South is pissed that Germany wants them to take a 15% cut in natural gas consumption, because we're on the verge of an absolute crisis during the winter. Q late Q4, we're getting there. It's horrible. It's an absolute. It's just bananas what's going on. And in the U.S., we're on the verge of an inflection point. We're going to see whether some of the ideas of the macroeconomists are going to play out, and the Fed has no choice to pivot and increase liquidity in the system. Increase liquidity in the system, you know damn well what plays out with regard to risk assets. Welcome to March 2020. So that's why we have our assets. Just because it's a bear market doesn't mean you have assets. What happens in a bear market? You know, according to my narratives, some people sell capital gains. You can sell, and but what I say is you carve out cash to survive. You carve out cash and you save from your income so that you can buy. When it's cheap. You buy during austerity, you sell during prosperity. That also means when it's ripping and everyone's like euphoric, you sell, which is very much consistent with the sell high narrative, which is just very shallow and just not granular enough, in my opinion, anymore. We've evolved past that point. I haven't even popped it on the mainstream. I don't really have much to show you. I can show you some technicals, what I'm looking at. So with regard to a bear market buy, obviously curve I think is one of the most significant protocols. So we often look at curve. So with regard to a bear market buy, obviously we bottomed at 50 cents or at $1.50. It's a 300% rip from the bottom. $40. We're at 300% rip, give or take. Come on. 200% rip. That's wild. That was a great buy. I snagged at 66 cents. I snagged at $1. I'm very content. Well, why? What's the rationale there? Good prices. Do we hit a higher low? That's all that matters. You buy in a bear market during a period of austerity if you expect higher lows. So what would it take to push the price down to where it was? What did it take to get us to where it was? This wasn't bearishness. This rip from the high, especially these monstrous cascades, wasn't bearishness. Invalidation of the narrative. This wasn't just selling because people are like, oh, I could get a better opportunity elsewhere. This was selling because of cascading liquidations. People needed the liquidity, which means at the bottom here, the only people remaining were the persons that didn't need to sell, didn't want to sell, and believe the narrative. Understand the narrative. It's not about belief in the narrative. The narrative is what it is. You either see it or you don't. So when it got down here, there was no more sellers. So look what happened back here. Look at the period of end of 2020. Come on. Come on, come on, come on, come on. So you see a higher low. Maybe you get to the 60 cents and you rip to the bottom. And what? That's all that matters. And in the meantime, while it's going up and down and finding a higher low, it prints cash flow. So, and plus, it's a breakout from a damn massive, the most massive falling wedge I've ever seen. So I'm not, and it's above we're on the daily right now. So from a technical perspective, a close on the daily above the 100 SMA. I mean, this chart looks wild. This chart is wild if it closes above the 100 SMA. I'm not buying anything right now. The discounts are no longer available. How's that for an observation? We're in a bearish market, so everything I'm talking about with regard to portfolio additions in a bearish market, the discounts are no longer there. The discounts were, and the discounts are gone. I have likely nothing that I'm going to be adding, especially to curve, unless there's a big rip down. I'm looking for maybe another 100,000 more. That's about it, but I don't have the cash for it. I would need it to depreciate significantly to be able to get that. Or as another one, eyes on rising wedge. I want a cheap ass price. I'm not buying unless it's, we find the bottom $1.06. Otherwise, it's a missed opportunity. Water under the bridge, baby. I'm not buying unless this thing is on discount, fire sale prices. And you'll have persons that say, you'll never get it. And I'll be like, okay, great. Then I won't buy it. I'm not going to buy something if I don't want to. I'm not going to buy something if it's too expensive as compared to what I want to buy it at. And if I can buy it at $1, I'll add. If I can't, all right. That's why you have a diversified portfolio of other shit that you hopefully got at better prices, optimal prices that are participating in markets going up and down over time, producing cash flow. So you have the consideration to buy something else at a price that you want to buy it at. This rationale that I presented to you just now plays into don't force action. You can't force a portfolio. You have to let it be very casual. Either you're going to get the damn price you want, or you can't. Don't force the buy. That's how you buy it now. That's how someone's buying their first entry, and it's about to break down from a falling wedge, and then bam, $2, and you just lost 33% of your money. It'll probably stick here 217, 218 for a couple minutes, and then it'll fall down. And if it doesn't, I'm wrong. Great. I'm happy for people that own it. I don't. I have my small position, which I bought at 66 cents, and that's great. I'm happy. That's what I'll have. We'll see what it does. I do not force these markets. Do not force a bear market. Bear markets will take from you. Let's hit some questions, and maybe I'll flip over to convex chart because that thing's been moving also. Killis is in the house. Johannes, Freedom Hacking here from the first second. My man, we've been doing this, and the story has changed so much over the last couple of years. It's so much more of a coherent, consistent, digestible story nowadays. But you had to start somewhere. I had to start somewhere. So it's really cool where we've gotten to. And the streams just flow. I always have something to talk about. There's always something interesting to observe and to digest with these markets. We've come a long way, guys, and I hope you all have grown as well with your confidence, comfortability, and capacity to navigate these markets. Because the last thing, your failure is not navigating them. The failure is leaving and evacuating them. Because this is a market that's worth navigating, trying to navigate stocks. Ugh. People have been trying to do that for 100 years, and what has happened? Less and less and less and less people are more success or less successful. Less and less and less people are successful, and it's become more concentrated, the wealth, and you need millions of dollars to get anything from dividends. So it's just not. There's no entry into the market. You can't get a position in the market for it to be sustainable. Because I'm not dealing with that capital gains bullshit. That'll drive you nuts. It's not sustainable. Dr. Clayton, a pleasure. Tab C, hello. Macro DeFinomics. I mean, the crossover in the stories between macroeconomics and the crypto space, it's part of the macro equation. It's a small emerging market, even as compared to a lot of the sovereign emerging markets. But by definition, this is an emerging market because it has trapped dollars. And that is the biggest, most meaningful measure of the success or even the status of an emerging market. How well it's trapping dollars and what is its current state with regard to quantity of trapped dollars. That's it. As much as macroeconomics is overwhelming, when Jeff talks about euro dollars or when I talk about the five, six, $700 trillion derivatives market, it's overwhelming. It's also very simple. And one of the biggest lessons learned over the last couple of years is to drop the animosity towards the dollar because that just hurts you. Just drop a lot of the prevailing narratives and focus on navigation. Because then you can navigate and then you realize and you learn how to navigate the markets and be successful. Then you could also appreciate the narratives like the dollar is a piece of shit. Great. I have the dollars to go use pieces of shit to go buy lunch or to go pay the electric bill. Still need the dollars. You need them. Period. One curious view. Good morning. A pleasure. Ron, what are your picks to add in the bear? Um, I added Aura a bit ago, but I added synthetics. Let's look at the synthetics chart. Let's see how that entry was doing. So this was a diamond bottom. I posted about a diamond bottom reversal. This is overwhelmingly a diamond. So diamonds are typically reversal patterns, depending on where they break. This is a massive candle buy. It needs to get above the 50 SMA. Is that the 200 SMA even? It's above the 50 SMA. This has to get above the 200 SMA. This is the 100. This is the 200 EMA. So it's in a but the same rationale is there. I saw the diamond pattern. I saw what's going on fundamentally with regard to available SUSD supply on optimistic Ethereum. And I see there's a deficit, which means in order to balance and arbitrage the LP positions, SUSD will need to be bought, SNX will need to be bought, SUSD will need to be minted to balance the pools. That's how you get the SUSD. So obviously, there's a demand for SUSD probably because of Quenta, the options, the leveraged options trading platform, leveraged synthetics trading platform. So there's a demand for SUSD. So how do you get SUSD with SNX? So I think SNX is extraordinary. Why? Partially because in 2019, this was my winner. I rode SNX from 70 cents to $7. And in 2020, this started almost everything for me. There was three protocols that started everything for my entire experience over the last 2 years, including to the current status of the portfolio with regard to how much it's worth. There's Synthetics, Kyber Network, and Bancor. Kyber doesn't have traction. Bancor is, I love the tokenomics. A lot of people hate on it, but I think it's brilliant in many regards. But it's not performing. So you could have a brilliant tech, great tech. It's not a good investment. And that's okay. So I'm still looking at it, but it's not a good investment until it has something. And what is the biggest thing that makes a good investment in crypto thus far? It's the damn federation. Federation, boys and girls. And I'm not going to digress into it, but we have talked about the federations and what it means. So that's why my eyes are on Aura for a price that I want. Synthetics has such a history, and it has basically the potential for a significant federation because it's a primitive. It's a stablecoin, and you need the stablecoins to interact with the leveraged synthetic protocols. Optimistic Ethereum is becoming pretty much a playground for synthetics. Why did you know that synthetics was probably the first protocol released on optimistic Ethereum? Way before uh, it was even folks see Arbitrum and see Phantom and see Avalanche, and then those were hot. And Binance Smart Chain, and it took a long time for optimism to catch on. Took a long time, but now there's the bridges. Now it's functional. Now, finally, it reminds me of when Phantom started to catch a bid. There was a time when it was a multi-chain.xyz, and there was literally nothing on Phantom. It was like a ghost town, and there was no liquidity. You know who the first to deploy, one of the first to deploy on Phantom was? It was Curve. And there was nothing there, no liquidity at all. And then multi-chain XYZ got abandoned, and you have multichain.org now. So it's fascinating, the progression of things over the last 2 years. Um, and I think, as compared to late 2019, synthetics is basically a primitive. It basically runs, optimism first to deploy there, and it's just in a very powerful position with regard to partnerships and the offering it provides from a technology standpoint. And this technical setup uh, provided encouragement that this is not going to go lower. Goes lower, it goes lower. What are you going to do? But the point is, there's encouragement, there's confluence suggesting it's not going to go lower. So there's rationale behind me taking the position. Now, bear in mind, you know, a lot of people, some people, small group today, 36, but still, point being, when I say taking a position, this isn't capital gains. This isn't expecting significant appreciation. I have no interest in appreciation for new persons who happen to be listening. I care about, I'm not going to digress. I care about owning base layer, foundational protocols, infrastructure, and basically collecting rent and being on the right side of rent. So I'm not a, there's no, I wouldn't expect multiples on capital gains in this market. This is not a market to experience capital gains. This is a market to take positions, to own property, to own the infrastructure. And that was my pick with regard to Aura because it expresses the Federation similarities with the Curve Federation. It's my pick with Synthetics because it's a primitive and it's building a bit of a federation and it has such a history. Such a history, and the fact that there's an SUSD deficit was quite an interesting observation when I saw it. One curious view. So you advocate for UBI. Complicated. It's complicated. I believe in incentive systems, but I don't believe in lack of productivity. I don't believe in complacency. I believe in fighting and working. I work so hard. I'm so exhausted, but I do it on purpose because I love to work. But I fight every day to be productive. So I'm not a fan of UBI without productivity. So I guess UBI would be more so. So what I would define it as more so federal employment. So I don't know. I'm not the historian like Lynn Alden with regard to how monetary policies have handled these types of considerations over the last hundreds of years. Um, and it's a very complex conversation politically. What does it mean? What are the potential outcomes? What are the history? What is the precedence? So I'm not a fan of UBI. I'm not a fan of welfare. I'm not a fan of food stamps. I'm a fan of if you want money, work for it, which means in capitalism, you got to find the job and you have to present skills, which is not overwhelmingly humanitarian. So not it's not it's hard. It's competitive. It's capitalistic. But so I am more so a fan of maybe government employment as compared to UBI. I'm not a fan of handouts at all. You want something and you want something, you want to be given something, you got to bust your ass for it. You got to work hard. Nothing should be free. There's too many people suffering around the world. You work. And then in many regards, that's Darwin. And I'm not, and that's a loaded phrase, and I'm not going to get into that, but I believe people need to work to be given things and work hard. One curious view is relaxing, and that's exactly what I'm doing. What am I going to? Am I trading? Am I doing anything? No, I'm probably just going to collect some fees. I'm going to make sure that convex. Make sure I vote by Sunday. Maybe collect some fees on what do I got? I got some fees on Frax and some fees on fixed forex. I got some fees. Maybe I'll do some rounds and collect some cash, but I don't need to. Maybe I'll just let it sit because I carved out a cash position. I trimmed 25% of convex. Convex has done very well over the last couple of weeks. May come down. Let's zoom out. Let's zoom out to the daily and give you guys a technical overview. Much less history to go on with regard to convex. If we go out to the weekly, you'll see. Well, this is obviously Binance, so massive falling wedge. We're not near breakout conditions. We have 2 hits on resistance, 2 on support. Breakout would probably be around 13, 14, 15, $16. Got to see the 100 SMA and the daily breach. So we're not near breakout conditions. We're in overwhelmingly bearish market conditions. You can see a resistance hit on the 100 SMA, and it falls all the way down to not negative. You probably see support around here, about $3, which means it'd probably go higher than 3. Probably see support on the 50 SMA, $5 and change. Should eventually break out. There's no logical reason to think it doesn't break out at some point. So the question here becomes, if you don't have a position, you want your best price point. Now that you're down in the single digits, it's very volatile. So you could easily see 20, 30, 40, 50% swings. Down to 5 would be 2 and change on 7, 30%, give or take. So you could get better prices than what we currently are, especially considering one headline will throw things into a titty transom and everyone starts to carve out some cash. Pre-sale, did you see the statistics that Curve is not even making 8% of total DEX volume? What are your thoughts on this? Guess it's because they don't list any assets. They have a lot of assets. I'm not quite sure what that entirely entails, statistic. All I know is one thing that I care about is daily volume. I'm on optimistic. Let's go to mainnet. $336 million a day. That's all I care about. So if it's 8%, great. If they're cranking out $336 million a day, lovely. Because what are they going to do when the market grows in the coming years? $3 billion a day? Yay! All that matters is volume. Lyft does very well. They don't have to beat Uber. Apple never overtook Microsoft. Microsoft has never been disrupted. Everyone thinks Apple's the biggest company in the world. Sure, great, groovy, grand, they might be, but they don't own enterprise. Microsoft owns enterprise. Apple never beat Microsoft. Apple does quite well. You don't have to be the leader. You don't have to own the best asset. You don't have to find the best DEX, which is Uniswap, but Uniswap is a useless asset. There is literally negative reason to own Uni. What are you going to do with it? Are you going to sell it? Because that's the only thing you can do. As a technology, as a token, all you can do is sell it. There is no other function besides governance, but who gives a shit about governance? There's no incentive. Human beings need incentive to perform action. Without incentive, why do something? And that's okay. That's programming. That's the human program. So incentives need to be baked into our society. Incentives need to be baked into our systems of education, of employment and productivity. The sooner we realize that, the better structured our society will be. Crypto bats, can you speak on synthetics as a revenue play for income? What's your thoughts on staking it to earn income? Well, that's the only reason I bought it. Um, let's go back to optimism. It pays. It's pulling in more revenue than Bitcoin. So it's extremely productive. There is a tremendous amount of demand for SUSD, and to get SUSD, you need SNX to mint SUSD. And right when I bought it was cranking out 104%. Now it's cranking out 144% returns. That's wild. That's a wild number. Um, So that's it. You have to have consideration with regard to debt and your SUSD balance. You can get into negative situations where SUSD balance will be less than your active debt, depending on the debt pool, the synthetics debt pool. So there's considerations there. So this is not the simplest asset to engage with, but I'm overwhelmingly of a high opinion of the protocol. Always have been, and interestingly, during a bear market, this bear market, synthetics is showing that not only does it have a survivability attribute, it has a significant systemic component attribute. People are using it. Protocols are using it. There's a reason it exists. There's a reason there's this kind of yield. This yield comes from consumption. It doesn't just come out of thin air because protocols are using it. This is the system's revenue. So this is good to see. So what do you do with regard to entries? Fundamentals tell you where to look. Technicals tell you when. I've said this for years now at this point. So technicals say you just hit resistance. You probably want to find a bottom support. Maybe why are these colors all skewed over here? Brown is the 50 SMA. So you probably look for support around the 50 SMA, maybe do a limit order at 240, 244, 243. Maybe get a stink bid at 230s. That's where I'd probably think to take a position. I just took a position at $3 because I don't care if it goes down. How much further is it going to go down? I don't really. It's not a capital gains play at all. I'll check back when it's 6, 7, 8, 9, 10, 15, 20, $50 in 2 years, 3 years, 4 years. Why it goes down, it goes up. It's productive the entire time. Too much shit that people go through dealing with capital gains and trying to make sure that the value of the portfolio is always going up. No, no. In a bear market, your portfolio is going to go down. In a bull market, your portfolio is going to go up. All that freaking matters is higher lows, just like a stock chart. If you had $1,000 in 2020, January 2020, and you got $10,000 in January 2021, and you got $50,000 in January 2022, in December 2021, maybe you had $1 million. Yeah, you probably should have taken more profit. We can do better. But the fact is, on January, you had more than last year. Higher lows. The higher highs are misleading. The higher highs probably indicate that you probably should have taken more profits. But it's the higher lows that matter with regard to how well you chose to construct a portfolio. One curious view, do you think that the deleveraging is done? I'm not convinced yet. Sure. Okay. So that means you think you could buy it cheaper. Okay. That means you need cash. That means if you have cash and it goes lower, you can buy it cheaper. Simple equation. I don't care if I have a position here and it goes lower. I care if I have a position here. All right, fine, it goes lower. I care if the lower price point is going to invalidate the narrative. Doesn't say, oh, this isn't the asset's dead. I need to choose a different asset. I chose wrongly. I don't think about depreciation like most, as I've been describing. Mr. Nobody's here to do better. We all should be here to do better, even me. Chris is in the house, second time watching live and second time being 2 a.m. I'm sorry. I wish I could keep these shorter, but I like to answer everyone's questions. I watch recordings every day. I appreciate the rationality. 20-year-old, my friend in Melbourne, difficult economic situation out there, and I appreciate your age. I myself was a 20-year-old at one point, and the fact that you're even consuming any of this type of financial conversation, you're in a better position than other 20-year-olds who are enjoying I was 20 and I was enjoying, and I wish someone kicked me in my ass and told me to dig into financials a little bit better. Be a different position for me at 40. One Curious View, I'm looking forward to ZK chains. Yeah, yeah. ZK is going to be big stuff, and the chains will be there, and there'll be cross chain liquidity. You see what's going on with layer zero, and Sushi integrated layer zero for cross chain. Was it Sushi Swap? Check this out. Did you see this? No. Where is it? Sushi. Sushi.com. So the Sushi Swap integrated layer zero for cross chain swaps, much like not hash nest, hash flow. So hash flow and Sushi Swap now trade as an AMM cross chain. What's the narratives? My December 2021 narratives are still spot on. Seamless cross chain interop. Boom. Trade right across chain. And look, there it is. It took less than a year. This didn't exist when I wrote those narratives. This did not exist. Layer Zero and Stargate wasn't published. This did seamless cross-chain interrupt. Boom, disintermediated protocol managed arbitrage. So this was, like a popsicle finance ring. They were early, and they got caught in the wrong market timing. But in order to do this, you needed layer zero. So I did say when Popsicle was hot that, yeah, it's really like Q4, which is getting close, and Q1 2023. So I think that might get pushed out. But in order for disintermediated protocol managed arbitrage, cross-chain liquidity provisioning, and MEV mitigation and capture systems, really for this to be hot, you need seamless cross-chain interrupt. But this is a big narrative. This is big. This is big, 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 and it's going to be very, very, very profitable. But it's not ready. So the technology could be hot. It's not a good investment. It's not ready. You need increasingly seamless cross-chain functionality. And what has every protocol been doing? VE. So this I left this here, but it's not really current monetary policy. My understanding of what they built has evolved. So it's really voter escrow, um, MMT concepts, circulating supply disruption, and locking periods, and a myriad of other attributes that we've talked about. And look what happened with Aura. Aura and Balancer were hot, and they're still hot, and it's meaningful. And it's driven a lot of liquidity into the system, and the bribes, the incentivized voting drives a lot of the capital flow in the system. Why? Because that's what Curve proved to be the case. And this is how many, look, V multi came out, and how many V's came out? This was December of 21. This was over 7 months ago. And of course, this narrative is still prescient as always. Cash flow above all else. Because you get a cash flow, you hit a claim button, you throw it on your BitPay debit card, and you go to the store and you pay a bill. You go buy some food, you go out to Subway, you get some lunch, you go to the gas station, you pay for gas, you put it on your debit card. So cash flow is everything, because cash flow is how you live your life. Actually, let me answer the last couple of questions. Well, let me digress. If you haven't yet, you need to figure out cash flow. You need to figure out how to put a crypto stablecoins on a debit card and pay for things. You need to spend your money. The purpose of crypto is that you get yield, you get a claim button, you have money to spend. You operate in a crypto-centric mindset. And it's like folks back in 2016-17 cycle, they're like, not your keys, not your crypto, and people are still, there's much less hardware wallet support back then. Now we take it for granted, but you had to experiment with QT wallets and the limited hardware options available. But this is a required experimentation. You need to get a free debit card and need to spend stablecoins, because now you understand that if you could have a claim button that pays you stablecoins, you understand the flow. You've experienced the buttons that you can click in order to press a button to get money, to earn income, to be able to spend it. And that will increase your perspective and your perception of the reality of these markets. Yeah, Mr. Nobody, Sushi Integrated Stargate. It's very interesting. Um, last couple of questions. Let's do this. Kenneth, hey, no, I appreciate your thoughts. I learned the hard way. I made all the mistakes you said to avoid. Once this macroeconomic drama plays out, thoughts on how to identify when to redeploy capital. Basically, my fundamental or my most low level thoughts on that are um, this is a period of austerity, and austerity is for buying. So this is a period for buying, but there's no discounts in the markets. The discounts were down here. You're up 200%, 300%, big number up on almost all the meaningful assets. So you can expect it to come down. It's hard to find bottom. There is no finding bottom. There's just buying things at a discounted price. So that's plays into a false narrative about the buy the failed dip community, or from the buy the failed dip community. Just because something's down doesn't mean you buy it. You buy it because it's has systemic significance and it performs today. Like if you buy Netflix when it's down 80% and it goes down another 50%, all you could do is sell Netflix. There's no other function to the security. It doesn't do anything else. It's not like it's paying you money. And that's the difference. We have a foothold to get dividends. So if the asset price depreciates, the dividends are still coming in. You're still getting paid. If the only thing you can do with an asset is buy it and sell it, and the price of it goes down, you just lost money. You see what I'm saying? If curve goes down, I'm still pressing a claim button. I still could buy food at the end of the week, and I didn't have to sell my position. If any of these positions that I built over the years, you own the enterprise. So in that regard, the only characteristic that matters is survivability and a good entry. The good entry is so you get the biggest bang for the buck. You can buy as much of it as possible. And survivability means, is it entrenched? Does it have a federation? Does it have a moat? And that means it's going to exist, whether it goes up or down, and whether it goes up or down is paying you. So at the end of every week on a Friday, or Thursday in the Curves case, and Sunday on a convex and a Vodium case, and Thursdays for Aura, you get paychecks and you can buy things. So I hope that helps. That's a very high level of the stuff we talk about. Options for crypto. Synthetics has interesting ecosystem with Quenta, non-KYC, leverage trading, built on top of the protocol along with Lyra for options and Thales for binary options. Yes, it does. Oh, yes, it does. On optimism, no less, which optimism is an ascent, meaning last year there was nothing. It was testnet optimism and synthetics. It was nothing. But synthetics was the first to deploy into a very testnet setting. So what you're seeing right now is the traction for optimism, which is a big deal. I think it's a very big deal. Thanks for the stream always, Brian. You're very welcome. We're going to wrap it up in a second. Why hold hash flow if big exchanges are going to layer zero? Hash flow operates on layer zero. I wouldn't hold hash flow. I like the protocol. I use it. I like sushi. I use it. I would never, ever, ever own sushi. And I would never, ever, ever own hash flow. Albeit the pools are potentially interesting. I've looked at them. I can't justify a position. And they're just not on my radar at all. Brian, do you have a recommended debit card that allows stablecoin spend? Sure. The two primaries, BitPay and Crypto.com. These are what I use. They work just fine. Debit cards, stablecoins. Debit cards, stablecoins. Now, BitPay is a little bit better feel. Crypto.com is bigger, and they have quite annoying customer service in that it's very outsourced. So it's a little bit, it feels a little bit shady, but it's legit. They're a very big organization. But they work just fine. And obviously, I talk from a U.S. centric perspective. So if you're in Europe, it's monolith crypto debit. I spelled it wrong, but here it is. This is hot. I have texted them so many times saying, please give me something in the US. This is hot. European Monolith DeFi account. This is hot. Visa debit card, Ethereum wallet. It's literally DeFi. It's just. I want a monolith card in the US. All right, European friends and family. There's your three cards: US, BitPay, Crypto.com, I think, is global to a large degree as well, and Monolith for Europe. Pretty cool. Lewis is in the house. Always a pleasure, my friend. See, Convex. Let's take a look at Convex. So obviously it bottomed quite strongly, albeit it doesn't have the history of curve. I would have to do DeFi calculation, a spread to see that history. But from a Binance perspective, it's a big falling wedge. 776 looks pretty nice. With regard to an entry, it's hard. The survivability is there, in my opinion. With regard to an entry, probably get discounts. Probably falls back down to the 50 SMA. Get in about 5 and change for a wick down, maybe $5. Higher fours would be a more opportune entry. And if it passes, you miss it. Don't force transactions. Don't force things. If you either get the price you want. You either are a hostile takeover. You're either getting extreme discount. You either buffet the market or you're retail. So you got to think like Buffett if you want to produce results like Buffett. And that boy is not buying something unless that boy gets the price he wants. Either it's a damn hostile takeover or Buffett's not buying. That's the deal, my friend. I hope all is well. Stay in touch, please. One curious view there in Europe. You found something? Yeah, monolith. Monolith. One curious view. That's hot, man. This has been around for a while, and I've texted them and I'm like, please give me something in the U.S. And, I just want, but BitPay's worked out very well, and so has Crypto.com. I would not, I don't, I just keep it on the debit card. There's no DeFi wallet use. There's no wallet use. There's no custodian. You're just loading up a debit card, okay, boys and girls. So don't, I wouldn't use their other services at all. Debit card. That's it. Debit, 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 debit. All right, let's wrap. Oh, fold card, Peter. I'd have to look into it, but I don't. I don't really care about BTC. I don't really care about BTC cash back. I don't want credit cards. I want. I get my cash back in the form of business. I have my businesses. They produce cash flow. That's my cash back, and I'm not too interested in BTC. BTC, the narratives, I don't find uh, they're not they're not enterprise. Enterprise is a stronger narrative than Bitcoin. Bitcoin obviously has great humanitarian narratives, and I will never, ever, ever discount Bitcoin from a humanitarian standpoint. So that's an entire conversation unto itself. Um, they're not taking signups right now. Yeah, so it's limited. That's the deal. Ladies and gentlemen, Friday, July 22nd, 12:30 p.m. As always, thank you all for joining me. Tell everyone to subscribe because together we can do better. You know the deal. After party on Discord for the most rational community in the entire crypto space. Links are in the description for the stream. And enjoy your weekend. I wish you all the best. I will see you again on Monday. Peace.